Welcome to the panel on shaping Asia's financial architecture. As many of you know, and as one of the slides President Nakao showed, Asia in terms of GDP, and certainly Asia in terms of its contribution to global growth, is today, and we expect in the future, to continue to be the major dominant center of activity in the world. But how developed is Asia's financial architecture? Before we answer this question, maybe I should proffer a working definition of architecture, what we mean by architecture, because it's a big word. Most people probably think architecture is this wonderful fight between the US and China on the AIIB. That's what we think today. But really, financial architecture comprises three things, at least in my working definition. One, the network of institutions, both public and private, that comprise the financial sector, right? So we're talking about banks, insurance companies, pension funds. On the private side, the markets, the stock exchanges, the places where financial contracts are exchanged, written. It also comprises the public side, the central banks, the rules, the regulation. That's one set of things I think of in terms of financial architecture. Second is since we're talking about Asia or global financial architecture, the rules that govern this, especially the rules, not just in the country, but among countries, among different regions. For example, the rules about the governance of the International Monetary Fund, or the rules about development lending, ADB, World Bank, and so on. But there are also private sector rules, rules that govern contracts written in the financial sector, organizations like ISDA, rules that govern exchanges, and so on. And finally, probably not a topic for today, the philosophy that underlines all of this. I say not a topic for today because for the most part, free market capitalism rules in financial markets, right? It's a given. So with that definition, and to be provocative, I would say, notwithstanding a lot of work, the financial architecture in Asia is not commensurate with its economic development. Right? We have if you like, a wonderful car driven by a motorcycle engine, the financial architecture. To be provocative, fortunately, I don't have to answer this question. I have three sort of headline symptoms of that. Yeah. First one is that if you think of bank flows and capital flows, Asia does more of it with the US and Europe than it does with itself, notwithstanding adjustments for income, location, distance, and everything else you might want to put in your regression analysis. Second, many people in Asia are transfixed by what the Fed will do tomorrow, even though it is the Fed, and most of its decision-making would be and should be driven by domestic considerations. So whether the Fed raises interest rates tomorrow, certainly a lot of people are looking at that. And third, notwithstanding a lot of effort and improvements in things like regional self-help, the Chiang Mai initiative, ask any central banker in Asia, they would prefer a swap line with the Fed rather than more money through the CMI. So again, these are just to get us thinking about where we are in terms of the financial architecture, more like an adjunct to the center, which is still Europe and the US. We have a panel to answer and to help us think through some of these issues. I think the game plan would be to go through each panelist's presentation, 10 minutes each approximately, and then to do the Q&A. So we should end our presentations by around 11:35, 11:30, and then we have about 30 minutes for Q&A. So that's it for me. May I introduce the first speaker, Professor Lee. Professor Lee is Professor of Economics and Director of the Asiatic Research Institute at Korea University. So Professor Lee has also been involved in a lot of policy making, senior advisor to the President of Korea, worked at the ADB, the IMF, and has taught in many eminent universities in the world, Australian National University, Harvard, and Peking University. Over to you, Professor Lee.
Thank you, Dr. Leslie Teo, for your kind introduction. And ladies and gentlemen, good morning. I'm very glad to be here to participate in this important conference, and thank Center on Asia and Globalization for a kind invitation. What I'll try to do today is that I'll just use some slide and then start from the overview of current financial system and architecture in Asia. First of all, Asia's financial sectors are quite diverse as their economies, but they share some common characteristics, such as dominated by banks, and their capital markets now role has been increasing, but still regulatory systems are underdeveloped. We see the significant increase in the integration, not just within the region, but also globally. But there are significant vulnerabilities, especially to the cross-border capital flows. I'll address this issue again, but there are also other risks which I could not address today. There are increase in the credit growth, especially since the global financial crisis, increase in non-performing loans, and some bubbles, as well as the slow economic growth, which would be also challenging for not just for economy, but also the financial system in the region. We understand that countries need to respond to this type of the crisis and vulnerabilities at the national level, but also at the regional level. Asian economies have actively pursued regional cooperation in not just in trade, but also finance. But having said that, there remain significant challenges. I'll address this issue later. Okay. First of all, I want to show how much they were integrated. Economists are using the price data, also quantity data, to show the change in the degree of regional integration in the financial sectors across the economies. But they also see the sensitivity to the regional shocks or aggregate shocks or the national shocks, and how much there are spillovers across the economies. These indicators actually show that Asia's financial integration has progressed significantly over time since Asian financial crisis. This chart, left-hand chart, shows that the cross-market dispersions of weekly stock returns among the group of countries have declined. That means they move together. And also, right-hand chart shows the quantitative measures and the intra-region portfolio share, how much they share in total asset investment abroad, how much are invested in within the region. There are several different measures, but it shows the increase over the decade. I have not shown here, but other studies actually show that even though this regional financial integration increased significantly, they are relatively limited compared to the degree of global financial integration. So again, I mean, the Asian financial markets, as just the moderator said, is more integrated globally compared to the regionally. This actually raises a lot of issues related to how to build appropriately regional financial architectures. One study, I'm just showing this is my own study. This is just decompose the volatility of the stock returns over time into the three components: global shocks, regional shocks, and national shocks. This result showed that over the decade, actually what happened is the global component explained a large share of the volatility compared to the regional shocks. So this is the means global shocks, which will come from the US, Europe, will raise a lot of issues to the Asian countries. So next slide, I'm going to what happened during the so-called U.S. Fed tantrums in 2013. At that time, Bernanke hinted in the May 2013 he would like to do normalization of the monetary policy, especially in the buying the long-term securities. He would like to now reduce that. And then emerging market economies, not just Asia, but also other regions, fluctuated very significantly. That means this risk aversion during this period will be escalated due to the psychological factors, not just because of the capital flows, but also having said that, I mean, this huge liquidity created by the central banks in advanced countries flowed in Asian countries, which maintain the relative resilience in terms of the economic growth over time. That will go back to these advanced countries. So this is a significant risk. So what would happen if U.S. Fed raise interest rate? Well, if I know, I would not be here. But I will just introduce what IMF is saying, I mean, because I'm sorry, I mean, I could not introduce the study produced by the ADB. I mean, if I knew ADB president would come, I mean, I would like to pick up the one study done by the ADB. But this is just the last April ADB's regional outlook in Asia and Pacific introduced. I mean, this is a little bit complicated techniques, so-called global VAR, but this IMF has been using this. Then they assume sometimes some type of the shocks, I mean, historical size. I mean, this is the calibrate to the size of the shock in 2002. At the time is the Enron scandal actually hit the global markets. I mean, so it's not like a global financial crisis. It's not a very small shock, but it's a sort of a medium size of a shock. And then what would happen to the Asian countries? Mainly through the trade and financial linkages, Asian countries' growth rate will decline up to between 1 and 2 percentage points, as you can see. I mean, it's much smaller in some countries, much larger. Singapore will hit very hard. Not surprising, Singapore is a very open economy, and then relatively small domestic sectors. And then if you look at the equity markets, there will be a significant decline. 10 to 20%. I mean, that's what would happen. Then question is what Asia should do. I mean, this is why we are asking for the regional financial corporations. Well, this kind of the regional integration or global integration create not just the benefits, but cost. So how to maximize net benefit would be the important issues. So regional corporations, building regional institutions could help manage the cross-border capital flows in an appropriate way to reduce these vulnerabilities. I mean, this is why, of course, at the national level, each country should do the best to minimize the shocks. But at the regional level, we could do better. I mean, that's what we have learned during the crisis. Why? The shock is coming to the individual countries, but the Asian countries will hit simultaneously. This is what happened. I mean, each country, it doesn't matter from the perspective of global investors, is Thailand or Indonesia, Singapore or Malaysia. They just see this is emerging Asian countries. They will withdraw the money if one country got into a crisis. So at the regional level, we need some kind of the mechanisms. So this is also there are many other issues, I mean, how to rechannel Asia's saving into the Asia's long-term investment, I mean, and how to build up Asia's global, the influence in the global markets. And there are progress, yes, CMIM, Chiang Mai Initiative multilateralization can provide short-term liquidity to members when needed. But however, I mean, the efficacy of this facility is yet to be tested by any crisis. If the crisis is at a bigger scale, it would be a little bit difficult to meet this challenge. I mean, so my suggestion, actually, I have been writing this. I mean, Fed should do more, the US Fed, because especially if crisis comes from the advanced countries. So emerging countries should raise the voice. Fed should extend some kind of the mechanism, such as a swap mechanism, to minimize the risk in the emerging country. Actually, during the crisis, they did by extending the swap arrangement to the some Asian countries. In terms of the regional integration corporations, I will just briefly, there are a lot of issues. I mean, it's one, political issues, one, all kind of these cooperation mechanisms also involve loss of sovereignty. I mean, the national sovereignty, each country believe is very important, but if you want to cooperate, you need to lose some kind of your national sovereignty. So to build up common interest, I mean, this is the significant political challenge because all the political support from the each own nationals, not from the other countries. I mean, so this is I'll just get to some China issues. There are only this is two last slide. China initiated a new initiative. That's a very important issue. So one is, I want to just pick up the two things, RMB internationalizations, and China has signed bilateral currency swap agreement with 28 central banks, as you can see here. And now is the renminbi could become the one currency in the SDR basket at the IMF. And well, just given the China's growing influence in the world economy, renminbi will likely emerge as a new international currency. Of course, it is subject to the more convertibility and more efficient financial system and more economic financial stability in China. But having said that, so it will take time to renminbi become the international reserve currency. But I think it's the renminbi will play a very important role. It will have a significant impact on the regional financial architecture. There are a lot of discussions to build up some regional basket currency, but maybe renminbi will become the regional currency. We'll see. It's all depending on the conditions I just mentioned. AIIB, yes. The justification for AIIB is that there is huge demand for infrastructure demand in the region. And current existing institutions cannot meet this existing demand. In that sense, AIIB can play a very important role, especially complementing the existing institutions such as ADB and the World Bank. But it also clearly serves China's interest because it will be located in China and they will have a Chinese as a first president. I mean, so, and this question is obviously this one motive for AIB is to finance this one road and one belt initiative. I mean, this is so when we think about Asia's financial architecture, whether China's initiative can contribute to better regional architecture or not, I mean, this is the big question. Okay, so let me conclude. First of all, before getting to the regional financial architecture, we need to discuss this financial vulnerability in the region. So each own country should strengthen own financial system. I mean, to avoid and manage financial crisis. That whenever we discuss financial issues, that's first. And then especially now, the U.S. monetary policy reversal, not just the first time increase, but over time, this normalization process will become more disruptive based on the historical experience. So each country needs to just do its own mix of the policies, including the exchange rate, macroeconomic policy, macroprudential, and if we need some capital flow management. Regional integration, regional cooperation, where I was head of the Regional Integration Cooperation Office at ADB, so I think this is in my heart, I mean, this is very important. I support the Chiang Mai initiative. I support the more extended role of the AMLO. I think we will see how it works. And then for this whole process, I think China can play very important roles. And then this regional financial cooperation, building better regional financial architecture will be good for China and Asia and for the world economy. Okay, thank you very much.
Thank you, Professor Lee. Next, could I invite Mr. Gokhan, Subir Gokhan, who is currently Director of Research for the Brookings India Institute, but formerly in policy making at the bank, Reserve Bank of India as Deputy Governor, and also in his career, Chief Economist in the private sector and in some academic positions.
Thank you, Dr. Teo, and thank you to the Center for Asia and Globalization for inviting me to share my thoughts. I appreciated the framing of architecture in that broad triangular structure, but I'm going to be a little narrower in my focus. And my thoughts are basically motivated by recent developments that suggest that and I define architecture in this form, a new financial architecture that replicates the Bretton Woods framework in functionality is being built in Asia, with China playing a pivotal role. There has been some discussion about the motivations for this development. Some observers attribute collective frustration among emerging market economies with the lack of progress on governance reforms in Bretton Woods institutions. That may well be the case, but in terms of prospects for success, I think the motivation matters less than the organization and governance structures that are put in place for the new institutions that comprise the Asian framework. Of course, it will matter a great deal to its success whether it assimilates appropriate learnings from the experience of the Bretton Woods institutions, which themselves have evolved considerably over 7 decades of their existence. And I think, in a sense, the presentation by Mr. Nakao reflect this in the ADB's own evolution. Before I get to the substance of my remarks, let me articulate my concept of the Asian financial architecture. Although of the new institutions being set up, strictly speaking, only the AIIB has an exclusively regional identity. I would include 3 others: the New Development Bank, which is the BRICS institution, the Associated Contingent Reserve Arrangement, which sort of takes on an IMF or lender of the last resort role, and also China's New Silk Road Fund into this framework. That's essentially a national entity, but its mandate, its mission has regional dimensions. There are 2 broad reasons for this. One, as I said earlier, China is playing a key role in all of these. Second, even though the 3 have members and potential activity outside Asia, the continent will undoubtedly comprise a substantial part of their business. So I would like to focus on 3 sets of opportunities and 3 sets of challenges for the financial architecture as I have defined it. The most significant opportunity, I believe, is going to be provided by multilateralization, in the same way that it did for the Bretton Woods, of regional savings. Let me focus here on long-term development finance to make my points. Bilateral assistance is certainly an option, but comes with well-known limitations and constraints. The lender's priorities and ability to appropriate benefits in some way will always be a factor in the process. Within a multilateral institutional framework, savings and risks can be pooled. In a sense, both lenders and borrowers' priorities can be reflected in resource allocations without a direct association between them. Of course, this is the basic rationale for financial intermediation in the first place. But what makes it particularly significant in the contemporary Asian context, and I think this is echoing views of the earlier speakers, is that the region as a whole is the biggest potential supplier as well as demander of funds for long-term development finance. An efficient intermediation mechanism that more faithfully reflects regional priorities and requirements could conceivably serve the region's interests better than a large multilateral framework or larger multilateral framework. The second opportunity relates to the potential synergies from coordinated investments between countries. Asia has been a growth neighborhood for a while, and this again in Mr. Nakao's presentation, the list of countries from Asia that are in the top 10 fast-growing countries list. I think for the last 30 years, more than half the top 10 fastest-growing countries would be from Asia. And that is a phenomenal record. So I call it a growth neighborhood for a while, meaning that every country in the region can potentially benefit from the growth performance of its close neighbors. And that's the benefit of being in a growth neighborhood, is that whatever is happening around you is actually lifting you up, giving you the opportunity to improve your own performance. Even as the momentum may be winding down in some countries, There are others on the threshold of a long and sustained growth phase. But the materialization of these benefits depends on several investments being made, both to enhance domestic capacity and productivity and to create better linkages. And this is, I think, absolutely critical, better linkages to proximate markets and products. This is not just a matter of economic policy or investment, it's also a matter of diplomacy and for an external affairs, but the two have to go hand in hand. This kind of coordination has to be based on shared understanding and prioritization between the countries involved. But it could be reinforced and facilitated by a regional institution that has the capacity to both spot the opportunities for collective benefit and, as a consequence of its governance structure, actively help countries to design and implement such investment programs in a coordinated fashion. Surely the ADB is also doing this, and I think when I look at the role and the effectiveness of this new architecture, I don't really see it as operating independently or in competition with the existing framework. I think it is more of a complementarity. It is filling a niche potentially that currently exists, a niche that is currently not fully occupied. The third opportunity is with respect to leveraging local knowledge, skills, and experience. Looking back over the past couple of decades, it is quite clear that the multilateral institutional framework has become at least as much, if not more, a purveyor of knowledge than of finance. And look at the recent reorganization of the World Bank. It is completely driven by the idea of knowledge as the core competence, the core activity of the institution. And I think that's a very, very important transformation. Whether it succeeds or not, we don't yet know. But as a strategy, I think it is a very important reflection of knowledge becoming as important, or if not more important, a resource than pure finance. Exploiting the learning curve based on other countries' successes and failures is a critical service that such institutions can provide. The opportunities for learning will presumably increase across countries that share geographies, are in proximate states of economic and institutional development. The closer you are, the more you have to learn from each other, and perceive mutual benefits from greater bilateral and regional integration. A regional institution may be able to do this more effectively than a global one. Of course, these opportunities only capture potential benefits. I want to list a set of challenges as well. The realization of these benefits depends on the strategies and resources that the regional institutions put in place. And let me list three important challenges in this regard. The first challenge relates to the quantum of funding. Going by funding commitments across the institutions, we're really talking about tens of billions of dollars at this point relative to several $1 trillion worth of requirements. There is a huge gap between demand and supply. Of course, it would be naive to expect these institutions to become the dominant source of finance in the Asian region, and I go back to my point about complementarity rather than competition. But in order to lay claim to the status of a new architecture, they will have to establish a visible presence relatively quickly. Without this, they will lose credibility, both with their borrower constituency and the rest of the world. While the NRSF, the New Silk Road Fund, may not be constrained by this, given that it is more in the nature of a bilateral institution, the other three certainly will be. How to leverage the initial cost, the initial funding at a cost low enough to be able to lend at rates attractive to potential borrowers is a question that the new architecture must resolve quickly. If it becomes increasingly dependent on the resources of one or a small number of countries, the appeal of its apparently multilateral nature will risk being diluted. The second challenge will be the priority to be put on sustainability. It took many decades for the incumbent institutions to internalize environmental, social, and governance issues. And these are, of course, reflected in the 8 necessary conditions that President Nakao laid out, and mainstream them into the lending strategies. I think that's happened now. But as onerous and as frustrating as these issues sometimes might be, they are central to a viable development strategy of which the concrete building blocks will be the kind of development projects that this architecture will presumably finance. It would be a suboptimal outcome from both the national and global standpoint if these institutions provided borrowers an escape route from these conditions. It is imperative, therefore, that they lay down a set of broad sustainability requirements for borrowers to fulfill. The aim should be sustainability neutrality, which is that projects should adhere to a similar and hopefully reasonable set of standards regardless of where their funding is coming from. The third challenge is in relation to governance. If the assessment about disenchantment with the governance framework of the Bretton Woods institutions is correct, then it poses a direct challenge to the emerging governance framework of this architecture. The dominant shareholder model, which essentially is how I would characterize the Bretton Woods, must give way to a more cooperative and collective arrangement. Of course, this is easy to lay out in the abstract, but much more difficult to put into practice. But it will be a potential differentiator for the architecture from the incumbents, for the new architecture from the incumbents, and some priority must be put on it. There are two aspects to this. First, there is the set of formal structure of decision processes and rules which needs to reflect the collective approach. Second, there has to be a broad perception that the rules are being followed in spirit. Of course, this has to be balanced against efficient and speedy decision making. These issues are clearly easier to resolve in the context of corporate structure than a multilateral one, where the accountability frameworks are very different. But this is one lesson that the new architecture should learn from the incumbent institutional framework. How do we avoid making what may have been the mistakes of the past? So let me conclude by saying that the emerging Asian financial architecture represents an effort by the region to take greater control over both the sources and uses of funds for its own development. In doing so, it increases the opportunities for the countries in the region to coordinate on mutually beneficial investments, benefiting both individual countries and the region as a whole. But to make this initiative work, I think the key requirement is that it must have a genuine sense of collective ownership. Thank you.
Thank you, Dr. Gokhan. Next, may I invite Professor Yuqing Ching, who is Professor of Economics at the National Graduate Institute School in Tokyo. Aside from his academic career, he's also spent time at the ADB and the IMF and with JICA. Professor?
Thank you, Chairman. Very glad to be here. In particular, it's my great honor to join the same panel with President Nakao. He's my former boss. Yeah, a little bit nervous. I'd like to talk about 3 points. The first is the architecture of a global economic governance. I think is a part of a broad global financial architecture defined by the chairman. The second point is evolution of regional economic governance building. And the last one, the significance of Asian Infrastructure Investment Bank. As you know, this global governance is a term we hear often, but it's not a virtual concept. I think global economic governance basically consists of following institutions: the IMF, World Bank, and the 4 regional development bank: ADB, African Development Bank, Inter-American Development Bank, and the European Bank for Reconstruction and Development. If you look at the governance structure, U.S. has monopolized the presidency of the World Bank since its inception. It also has veto power in the IMF. It's the only member which has a veto power. It has 30% of voting power in the Inter-American Bank, so U.S. can veto any proposal in the Inter-American Bank. It has 12.7% voting power in ADB, just 0.1% lower than Japan. So here the U.S. and Japan is called equal largest shareholder of the ADB. Therefore, it's not an exaggeration to see that the architecture of a global economic governance is under the leadership of the U.S. So clearly we know it needs reform to reflect the rising economic status of emerging economy, in particular China, the second largest economy. Asian countries have tried to build up regional financial institutions governed by Asian countries. Back to 1997, after the Asian financial crisis started, the Japanese government proposed to set up an Asian Monetary Fund. But the US and the IMF opposed the idea. So without clear support from China, I think at that time, China was not strong enough. So the Japanese government eventually gave up the idea. So in 2000, the government of ASEAN Plus 3 established the Chiang Initiative. Professor Lee already mentioned that. So this is a progress towards building regional financial architecture. As today, the Chiang Mai pool of foreign exchange reached 240 billion. In 2011, in Singapore, that is here, is the ASEAN Plus 3 Macroeconomic Research Office, we call AMRO, was founded here. So the AMRO basically emphasizes on monitoring and analyze regional economic condition to enhance effectiveness of surveillance. As you know, surveillance is part of IMF work, but we try to build up a regional like an institution which give a more better understanding about the performance of regional economy. Now in 2005, we have this AIIB. AIIB is emerging, is coming. This is the most significant initiative in building the regional financial architecture. Why? Now there is a 57-member country have declared they are going to be founding member. Among those 57 members, there are 4 of the G7 countries in terms of representation. I think is very significant. AIIB is the first multinational development bank initiated by China and led by China. So China remains a developing country. So if you recall all this kind of multinational institution, there's none of them initiated and led by developing countries. So that is quite significant. Therefore, I think the AIIB will transfer the governance of a global financial architecture from the US-led unipolar to the multipolar. Well, besides the World Bank and ADB, so AIIB will be a new institution providing finance for definitely needed infrastructure construction in the region. In addition, I think AIIB will function as alternative platform, multinational platform, for discussing regional cooperation and promoting consensus on agenda related with trade liberalization, capital mobility, and financial market integration. The establishment of AIIB represents a concrete step of China commits itself to providing public goods for regional development and actively leading the regional cooperation and integration under the umbrella of a regional organization. As you know, China has many proposals in order to strengthen regional cooperation and promote regional economic development, like a One Belt and One Road strategy. The coordination for the implementation of the One Belt and One Road is crucial for the success. So AIIB, I think, in the future will function as multilateral platform for necessary coordination among all the countries involved in this strategy. Actually, promoting infrastructure investment is not a new idea. In 2005, this Japan Bank of International Cooperation, ADB, and the World Bank complete a project called Connecting East Asia, a new framework for infrastructure. So the project estimated that $1 trillion investment is needed for the infrastructure investment in East Asia in the next 5 years. I mean, I guess that start from the date of a report published. In 2009, ADB Institute, that's a place I used to work for 3 years, published another new report because this report covers not just East Asia, it's extended the coverage, cover all the Asian countries. So the report title is Infrastructure for Seamless Asia. The report estimated that 8.3 trillion is needed for the infrastructure investment in Asia from 2010 to 2020. Now the media always cited that number. So as a result of this report, ADB and the Asian government set up an Asian Infrastructure Fund with about $500 million US dollar. Well, of course, in terms of size, quite small. I think is due to the constraint of the lending capacity ADB and also the financial difficulty of the Japanese government. Well, the establishment of AIIB suggests that now Asia enter into the era of the two multinational banks, one led by China, AIIB, the other led by Japan. If you look at the name, how AIIB defined, that is the bank will focus on infrastructure investment. As President Nakao mentioned, ADB's major business also infrastructure investment. It's landing at more than 60% focus on the infrastructure investment. Well, I think to a certain extent, the competition between the two banks will be inevitable for bankable project or for maybe human resource, I don't know. But in the long run, I think this is what I vision, the two banks. I think ADB and AIB can function as an equal and a fair cooperation platform for China and Japan. Those two countries, the largest two economy in Asia, they are very important for the whole region. But often because of historical reason, because of geopolitical concern, the two countries cannot work together. They have different idea about the direction and approach of regional integration, or they even compete for regional leadership. But I think if the two countries, Japan and China, they can cooperate through the two banks, I think that will be perfect. Why? Because when they work together through two banks, I think the nationality or sovereignty image will be diluted. Nobody will pay much attention. So that is, I think, is maybe the better for the future of Asia, even we have two multinational development banks. I think it takes a long time for AIIB to prove itself that it will be a very important player in the regional economic governance. But I'd like to remind you to notice that the catfish effects of the AIIB have occurred. In May 2015, that's this year, the Japanese government announced the Partnership for Quality Infrastructure Investment for Asia's Future, in which 110 billion fund was promised. And ADB, as President Nakao mentioned, will also improve its lending capacity from 13 billion to 18 billion, about 50% increase. President Nakao also mentioned that because ADB will try to streamline its procedure for loan assessment, because if you look at the talk of the AIIB, they always say we want to improve efficiency. Well, so this is stimulating ADB also improve its own efficiency. Another interesting point is like the World Bank President Yuqing pledged up to 11 billion new financing over the next 3 to 4 years to Indonesia in the energy, health, education, and whatever. Well, regardless, many, I think analysts or China watchers basically speculate the motivation and the political agenda behind this. So I think regardless of the political and diplomatic motivation of China for setting up AIIB, Asia will be the largest beneficiary of AIIB. Well, because the money will be invested in Asia, will help the development of the Asia. So $1 billion of investment either dispersed by the AIIB or stimulated because of establishment of AIIB, the infrastructure in Asia will be improved. The bottleneck of economic development in the region will be elevated. And when those billions of investment unlock the potential demand, I think that is also helpful for the global economy, because if you look at the global economy after global financial crisis, one of the key questions is from where we find the new demand, right? So this will create a new momentum and create the new demand. Okay, I'd like to stop here. Thank you very much.
Thank you. Thank you, Professor Xing. Last but not least,
thank you very much. As Professor Teo mentioned in the beginning, when we say shaping the Asian financial architecture of Asia can mean many things. And I'd like to mention 3 things. One is about the stability, financial stability, especially after the global financial crisis. When Asian crisis happened, there were many arguments, but this was because of a weakness of the Asian system, like the kind of a weak governance or regulations or the kind of more distorted capitalism, very strong relation between business communities and within business community and government and so on. But it happened to the global system, including financial center of the United States, and then European sovereign debt issues is linked to the euro system. But anyway, it could happen to anyone when there is a bubble of the real estate asset prices and so on. So I have been working for international financial system issues for many, I would say, decades. And when Japan chaired the G7 and so on, I was a secretariat for 3 times since 1980s or 1990s. So my idea is that after this demise of a Bretton Woods system of fixed exchange rate, capital movement is more promoted than trying to be prevented or controlled. In the Bretton Woods system, the idea is the current account transaction should be promoted, but capital account transaction should be controlled or should be managed to avoid, to keep the exchange rate stability, fixed exchange rate. But then after the end of fixed exchange regime in 1970s, capital movement was more promoted than restricted. It helped promote growth in emerging economies, emergence of more, venture businesses and so on. Overall, I think this free flow of capital supported higher growth of economies and some businesses. But at the same time, it came with the some instability. And I would like to mention this. When there is appreciation of currency backed by the strong economy of the country, price will be more stable because of appreciations of currency. They wouldn't pay attention. People don't pay attention to the asset prices as much as the CPI, but it should be seriously monitored, and it happened in Asian economy before Asian crisis, and it happened in the United States when it was hit by the crisis. Price was very stable in terms of CPI, but some asset prices like stocks and real estates were increasing, and there were so many reasons to justify it. Why stock prices go up? Because for these reasons, when Japan had the bubble in late 1980s, there was an explanation that Japan is now becoming a center of a financial system of the world. So it's okay to have such a high, rapid increase of prices in Tokyo, but it was there was no such ground. So we should be very careful. So in that regard, these movements progresses after global financial crisis. By the way, when Asian crisis happened, maybe I would say the financial center like the United States and Europe didn't really learn lesson. They thought they could manage the risk by delegating more power to private sectors because private sector has such a good system of managing risk. But it was not really true. We need to monitor the asset prices as well as prices, CPI. And also we should have monitored the risk taking and leveraging of the financial institutions more carefully, off-balance transactions by banks, especially the activities of investment banks and hedge funds. That's what we learned. So we are making efforts and there is a progress. But what I want to say here is that there are too much discussions based on the experiences of the United States and some European countries. But in Asia, what we need is not just regulating banks well or regulating financial sector as well, but how we can promote the financial sectors of Asia. As Professor Teo said, the Asian financial sectors are less developed compared to the level of GDP and so on. So capital markets should be should be fostered, and also bank accounts are not still common to people in some countries like Myanmar and of course Afghanistan and so on. So that is the second point. Financial stability is important, but we should pay also attention to how to raise our financial sectors in Asia. But about this financial stability, I want to say that Asian countries should make more voice, and the voices of emerging Asian countries should be reflected more in the Basel Committee of Bank Regulations, and also FSB, Financial Stability Board, which is a gathering of all those regulators of banks, insurance, securities, and so on. The second point about the policies in countries, we should promote, once again, capital market, because capital market has ability to mobilize more resources quickly. They can take risks of investment without going through banks. So banks can be protected more or less, even crisis happens. And the bank is important for settlement and transfer the money. So it's a kind of public goods. But the capital market can, in a sense, take some risks, although not totally, banks are not so totally insulated. Banks have capital market has an element of governance because of stock market and also disclosure element and so on. But at the same time, I would like to say that banks are also important. Commercial banks are important. Accounting commercial banks are so important for people. And for SMEs, small and medium-sized economies, enterprises, they cannot easily go to capital market because of so many requirements of disclosure and so on. So close discussions with bankers, bank managers in commercial banks or credit unions and so on, that is really important part of financing those SMEs and farmers and women and so on. So financial inclusion is important, but banks, including credit unions and so on, should play an important role. Third point I want to mention is regionalism. Previous speakers have already spoken about Cheng Initiative, kind of reciprocal financing of reserves between ASEAN plus 3 countries, and AMRO was established. This is a surveillance system of ASEAN plus 3 was established in Singapore, and they are always monitoring the volatility and movements of the markets to prepare for the possible intervention by this Cheng Initiative. And there is AIB and BRIC banks and so on. About regionalism, I think it's important to, and also the ADB and ASEAN plus 3 countries have promoted the idea of Asian bond market initiative to finance the big projects of each other, or corporate finance each other by issuing bond and investing each other instead of going through such market like America. So these are the projects, and I think this is really important initiatives in Asian regions. We should promote the regional financial system. But about the relation between global system and the Asian or regional system, we don't need to regard this kind of a competing or the zero-sum game. I think the IMF should continue to be central system for looking at the macroeconomic policies and the exchange rate and so on, international finance. And the World Bank should continue to play important role for global knowledge of development. But the ADB can play a certain role, ASEAN plus 3 can play a certain role, and so on. I personally feel that the dollar will remain the single most important key international currency for the foreseeable future. So, of course, renminbi can be a part of the settlement system. Yen can be one of it, and of course, euro is already there. And the pound can continue to play a role. But I believe the dollar will continue to be a single most important key currency in the world because of a very strong financial system of the US. And the US macroeconomic policies, including monetary and fiscals, are not perfect, but better than many other countries. And also, there are many people in the U.S., immigrants and so on. And the ideas are there so much, and there is a certain stronger security, military power there. And also, in addition, there is a network externality. If the people start using something, it's better to use it. It's more convenient, and I don't think there can be some replacement. So what matters is whether the ideas of emerging economies are reflected or not. If there is a reason, it should be reflected. But what is important is whether we can have a stability of the global system, whether we can support the development of countries and so on. In that, of course, voices of emerging economies should be heard more. But what is more important is whether we can achieve those goals and so on. And regarding leadership, the U.S. has, as you said, dominated or has had more important voices. But it's important that the U.S. is committed, involved in those important issues of the world. Leagues of Nations couldn't be so successful because there was no, participation of the United States. Although President Wilson, advocated this idea of League of Nations. So, what to me, it's really important that the major countries in the world have a commitment to these systems. Maybe it includes China, but what I want to say is leadership by those countries are also important, as well as the voices of emerging economies. So it's a little bit, I didn't expect to mention this, but because many of you mentioned it, regionalism is important to complement or to support the global system. But it's not, it is not the kind of the zero-sum game. We need to support global system. And global system should be supported by major economies like the United States. We shouldn't lose the United States. That is my point.
Thank you.